Hello and welcome to another daily market update by Market Intel. We're currently on the Market Intel website, dailymarketupdate.com. Feel free to use the link in the video description to register here for free on the website. If you do that, then you receive daily free Elliott-Wave updates about various asset classes, oil, stocks, cryptocurrencies, gold, the Nasdaq, the S&P 500. Let's take a look at a stock today. And we are taking a look at PepsiCo today. Haven't covered that in a video yet. And obviously when you register here, you receive all these written updates and you can see the probabilities for each scenario. You can see our primary scenario, our alternative, as I said, together with probabilities. And you can see the relevant support levels as well as resistance levels and targets as well. So let's take a look first at the 2-day chart, which is our long-term chart. It always is helpful to start with that one because then you get a good idea of the overall context, which can be very, very helpful. So now let's take a look here at this 2-day chart first. We can see that in our primary scenario, blue wave 1 completed in 2023. Blue wave 1 is obviously a long uptrend, a long-term uptrend. A wave 1 is a 5-wave pattern. And as I said, in the primary scenario, which we assign 64% probability, we assume that this long-term uptrend is over. And now that always presents an opportunity as well, because it indicates that now a decent correction is unfolding. And you can see it highlighted here already as an A, B, C structure, which, however, due to the depth of the decline that's probably required to complete this overall correction, this is only the A wave of the overall correction, so ABC in wave A. Then we should get a larger B wave and a larger C wave. The exact pathway of that correction cannot really be determined in advance. In any correction, we have to be flexible. That's just the nature of corrective patterns. However, the main benefit of using Elliott-Wave here is to understand that probably with a high likelihood this uptrend is over. We're now watching for a corrective pullback. The start of this magenta WXY structure here, or let's say the start of that A wave in WXY, indicates that, it is a corrective pattern, the downtrend, and the WXY structure is a corrective pattern, which further confirms this outlook. In the alternative scenario on this time frame, we still could see another high though, and blue wave 1 is not quite complete yet. I would only see this as confirmed if we see a break above $196.92. It's currently not what we are primarily watching for. We assign this only a 36% probability. So that means we probably are looking at declining prices over the coming months, maybe even years, or probably years, because you can see that this uptrend, it has taken years to develop, and probably the correction will also take a long time. Obviously, we're going to observe this further over the next few weeks and months to determine if maybe we have to adjust probabilities or maybe, the alternative is going to play out. But as I said, nothing we're primarily watching for. And also the reaction here to that previous swing low here, or the movement to the upside from this A wave low that occurred end of 2023, it is rather, let's say, it rather confirms our primary scenario. It looks very corrective, overlapping price action. So the assumption is currently that we are moving in a corrective rally, which should then set the stage for a C wave decline. Looking at the 2-hour chart reveals that here this B wave that I just mentioned is likely unfolding as magenta A, B, C, so corrective structure within a correction. A B wave typically unfolds as an ABC structure. And you see here that we are dealing with really corrective patterns. Also magenta wave A completed as WXY pattern. We're likely now in wave B of B. B waves are typically the most difficult waves to forecast. So we always have to be flexible within corrections. It's usually helpful to adopt the wait and see approach in corrections until clarity emerges and until we get a clear trade setup. We have the next line of support at $155.83. In our primary scenario, we expect the price to stay above that level because we see, first of all, this B wave to be completed first in magenta ABC. As I said, at the moment, it looks like we're in a short-term magenta B wave decline, which however should stay above that support area in the primary scenario, because a C wave up should follow first to complete this B wave that I showed you on the 2-day chart. So there's a little bit more work required to complete this corrective rally. This would be further confirmed with a break above $175.20, which is the next line of resistance. In the alternative scenario, which we assign only a 38% probability on this time frame, the A wave that presumably bottomed end of last year is still unfolding, and the development of this B wave here is starting a little later. So it would simply be a little bit delayed. Ultimately, that would probably then lead to a further extension of the overall correction. So I think at the moment it's about having a wait and see approach, being aware of the risk that PepsiCo involves. And as soon as we see a decent trade setup, we will of course add it here to the chart and to our analysis. So as I said, feel free to use the link in the description to follow us on dailymarketupdate.com and to register so you can receive free daily market updates. Thank you very much. Bye-bye.